Hey everyone, welcome back to Corporate Decoder, the place where we dig into the guts of financial reports and see if the numbers tell a story or just a snooze fest. Today we're dissecting a recent filing that's packed with enough bond data to make your head spin, but we'll decode it for you, so stick around. This filing comes from FundVantage's Trust, and it's essentially a shareholder report giving us a peek under the hood of three specific funds: the Ambrus Core Bond Fund, the Ambrus Tax Conscious California Bond Fund, and the Ambrus Tax Conscious National Bond Fund. It covers their performance up to the 30th of September 2025. Before we dive deep, if you love getting straightforward, no-nonsense insights from these massive corporate documents, please hit that subscribe button and ring the notification bell. It really helps us keep these decoder rings polished. And we have a fantastic community over on Discord, linked in the description below, where we break down more financial news and trends. Alright, let's start with the Ambrus Core Bond Fund. For the folks who invested a hypothetical 10 grand, the cost for the last year clocked in at a rather tidy $51, which is about 0.5% of their investment. That's pretty lean. Now, performance-wise, this fund actually did a little better than its main benchmark. The Bloomberg Intermediate Government Credit Bond Index, it returned 4.71% compared to the index's 4.01%, so a nice little outperformance of about 0.70%. The report says this was thanks to smart choices in picking specific corporate bonds and managing different types of investments within the fund. They explained that during the reporting period, investment-grade credit spreads, which is basically the extra return you get for taking on more risk with corporate bonds compared to safer government bonds, actually got smaller. That helped boost the fund's performance. They also increased their exposure to corporate and preferred stocks at certain times to take advantage of market conditions. The main downside, their positioning on the yield curve, meaning how they bet on future interest rate changes, detracted a bit from performance. Specifically, they were holding fewer short-term government bonds and more long-term ones, and when short-term yields dropped while long-term ones went up, that hurt them a little. Looking at the actual holdings as of the 30th of September 2025, the Ambrus Core Bond Fund has a significant chunk, over 43%, in corporate bonds. Within that, you've got big names spread across communications, consumer discretionary, energy, financials, and more. For example, they hold a substantial amount in AT&T Inc., bonds and Warner Media Holdings Incorporated bonds. They also have a big stake in Ford Motor Credit Company LLC and General Motors Financial Company Incorporated. In the financial sector, Trees a considerable investment in Bank of America Corporation and JP Morgan Chase and Company. They're also holding quite a bit in US Treasury obligations, making up over 32% of the fund. This suggests a balanced approach between seeking slightly higher returns in corporate credits and maintaining stability with government-backed debt. Now, let's switch gears to the Ambrus Tax Conscious California Bond Fund. Unlike the Core Bond Fund, this one is heavily focused on municipal bonds, making up a whopping 85% of its portfolio, with most of that, over 73%, being California. Specific municipal bonds, this is designed for investors looking for tax advantages, especially in California. The report mentions that for the past year, this fund actually underperformed its benchmark, the Bloomberg California Municipal Intershort 1 to 10 Year Bond Index, by about 1.40%. The reasons cited are similar to the Core Fund, involving yield curve positioning, and an overweight to callable bonds, which are bonds that can be bought back by the issuer before maturity, often underperforming when interest rates are volatile. Then we have the Ambrus Tax Conscious National Bond Fund. This one is also focused on tax-exempt income but aims for a national scope. It's also heavily invested in municipal bonds, about 82.7% of the portfolio. The year-over-year performance here was also a bit of a mixed bag. Underperforming its benchmark, the Bloomberg Municipal Intershort 1 to 10 Year Bond Index, by a little over 0.5%. Again, the culprits were similar yield curve positioning and an overweight to callable bonds. The report shows a breakdown of municipal bonds by state, with Texas being the largest single allocation in this fund at over 10%, followed by Pennsylvania at 8%. Focusing on the financials for the year ended the 30th of September 2025, the Ambrus Core Bond Fund saw its net assets grow significantly to almost $495 million. Its total advisory fees came in at over $1.7 million. But remember, there was a recoupment of about $69,000, leading to net advisory fees of just over $1.8 million. That expense ratio, the ratio of expenses to average net assets, was kept at 0.50%, which is quite competitive. The portfolio turnover rate was 71%, suggesting the managers were actively adjusting holdings. For the Ambrus Tax Conscious California Bond Fund, its net assets were around $431.5 million. Advisory fees here were about $1.45 million, with a slight waiver of around $3,000. resulting in net advisory fees of close to 1.45 million. The expense ratio was also 0.50%. The turnover rate was much lower at 26%. Finally, the Ambrus tax-conscious National Bond Fund had net assets of around $404 million. Advisory fees amounted to about $1.35 million, with a very small waiver of just over $1,000, leading to net advisory fees of $1.35 million. Its expense ratio was also 0.50%. The turnover rate for this fund was also 26%. Let's look at the top contributors and detractors for the Ambrus Core Bond Fund. On the positive side, an overweight to corporate credit helped as spreads narrowed, meaning the difference in yield between risky corporate bonds and safer government bonds decreased. The fund also gained from actively shifting between asset classes, increasing its exposure to corporates and preferreds when credit markets seemed distressed. Security selection within corporate bonds was also a positive, with the bonds held by the fund performing better than those in the benchmark. On the downside, their bet on longer-term government bonds detracted from performance when yields on those bonds increased. For the tax-conscious funds, the story was a bit different. The tax-conscious California bond fund saw underperformance primarily due to yield curve positioning and an overweight to callable bonds. They were holding longer duration municipal bonds, which underperformed shorter ones, and callable bonds also didn't fare as well when interest rates were volatile. The National Bond Fund faced similar detractions from yield curve positioning and callable bond exposure, suggesting a common strategy or a common market challenge affecting both funds. Now, if we look at the financial statements, specifically the statements of assets and liabilities as of the 30th of September 2025, we see the scale of these operations. For the Ambrus Core Bond Fund, its investments alone were valued at nearly $490 million. Total assets stood at about $496.8 million. While liabilities were around $2.1 million, resulting in net assets of over $494.7 million. This fund has a significant portion, over $11.7 million, in total distributable earnings. The Ambrus Tax-Conscious California Bond Fund had investments valued at over $433 million, with total assets around $439 million and liabilities a bit over $7.3 million, giving it net assets of roughly $431.6 million. Interestingly, this fund actually had a small negative distributable earning balance of over $1.2 million. The Ambrus Tax-Conscious National Bond Fund's investments were valued at just over $404 million. Total assets were around $409 million, and liabilities were close to $5.1 million, leading to net assets of approximately $404 million. This fund reported positive distributable earnings of over $1.1 million. When we look at the financial highlights for the Ambrus Core Bond Fund's institutional class shares, the net asset value per S-share remained remarkably consistent, starting the year at $10.12 and ending at the same amount. This stability is likely due to the fund's focus on a diversified bond portfolio. The total investment return for the year was 4.71%, which is solid. The expense ratio was a very low 0.50%, the Ambrus Tax-Conscious California Bond Fund's institutional class shares started the year at $10.24 and ended around $10.06. The total investment return for the year was 1.88%, impacted by that noted underperformance. The expense ratio was also 0.50% for the Ambrus Tax-Conscious National Bond Fund's institutional class shares. They began the year at $10.23 and finished at $10.11. The total investment return was 2.70%. Again, the expense ratio was a low 0.50%. From a strategic standpoint, these reports highlight the constant juggling act fund managers perform. For the Core Bond Fund, they're aiming for a blend of safety and growth using both government and corporate debt. The tax-conscious funds, on the other hand, are serving a niche market where tax efficiency is paramount, even if it means sacrificing a bit of headline performance. The underperformance in the tax-conscious funds, particularly the California focus, seems to stem from market conditions that favored shorter-term, less volatile assets, something these funds were less positioned for. Looking at the overall direction, the Ambrus funds managed by Whitty Advisors, LLC, seem to be holding steady. The expense ratios are commendably low, especially for the Core Bond Fund, and the advisory fees are managed through contractually agreed upon limits, which is a win for investors. The fact that the management firm is willing to waive fees to keep expenses down is a positive sign of commitment to shareholders. However, the underperformance in the tax-conscious funds is a key risk to watch. While municipal bonds are generally considered safer, the specific choices in duration and callable bonds didn't pay off this past year. This could be a short-term issue due to market cycles, or it might suggest a need to re-evaluate their strategy in fixed income allocation for tax-advantaged funds. In conclusion, the Ambrus funds present a picture of stability and cost consciousness, especially the core bond fund, which delivered solid performance. The tax advantage funds show a more challenging environment in the municipal bond market, leading to modest returns and a need for careful monitoring. It's a classic case of different strategies facing different market winds. What is your take on these bond fund performances? Are you surprised by any of the holdings or the strategy? Let us know your thoughts in the comments below. If you found this breakdown useful, please give this video a thumbs up, and if you haven't already, subscribe for more corporate deep dives. And don't forget to join our Discord community, linked below for more real-time financial discussions. Thanks for watching, and we'll see you next time on Corporate Decoder.